Today, I'm proud to say that under the UK's presidency, the group of the world's 7 most advanced economies, the G7, is launching a set of public policy principles for retail central bank digital currencies, CBDCs. Central bank digital currencies could be a digital version of money, a bit like a digital banknote that could be used alongside physical notes and coins. Unlike most of the digital money people use daily today, it would be issued directly by a central bank, like the Bank of England in the UK. And governments and central banks across the world are working together, looking into what having a digital currency might mean in practice.
At some point, the world is going to go into a crisis, or a country is going to go into a crisis. It might be the UK, it might be Italy, it might even be the United States, but something is going to happen. Things are very, very taut in the financial world at the moment. When that happens, I think they will close the banks. You'll wake up on a Sunday afternoon or a Sunday morning and hear the news that they've shut the bank, not to open on Monday.
This includes issues that people care about, such as ensuring users' money would be safe and secure, that it could work with other ways to pay, would be energy efficient and available to everyone. A potential CBDC could offer businesses and consumers new ways to pay in the future. It's all part of the wider story of digital innovation that has delivered benefits to millions around the world and in the UK.
And then by Monday evening or Tuesday, you'll get the announcement that we're having a new currency, the CBDC, and don't worry, it'll be 1-to-1 against the old currency. But there'll be some restrictions on your ability to convert your old money into the new money.
The decision on whether to launch a central bank digital currency is for each country to make, and no G7 jurisdiction has yet made that choice. These decisions raise important questions about the reshaping of our economy, financial systems, and the way in which people interact with money and payments. That's why working together and careful evaluation with our international partners is essential. In the UK, earlier this year, I announced a new joint task force between the Treasury and the Bank of England to look into a potential CBDC as a complement to cash and bank deposits. We're also hearing from firms, technology experts, and others. Under the leadership of the UK, this report today will help support and inform exploration of CBDCs in the G7 and beyond. With these principles, the G7 is leading an important step change in the global policy conversation. The report covers a range of important matters, such as financial stability, cyber resilience, energy efficiency, privacy, inclusion, and tackling illicit finance. These factors should all be considered when designing and potentially delivering a CBDC that would be fit for the future. Our shared objective is to ensure that CBDCs would be grounded in long-standing commitments to transparency, the rule of law, and sound economic governance. The G7 will continue its work in this important area, working with others to enhance understanding and use of these principles. We're excited to be taking a leading role with G7 members in publishing this exploratory work, bringing money and finance into the 21st century.
BC Bank pushes more of its customers to use online services. It has now announced plans to shutter more than 100 of UK branches next year. The London headquartered lender said that it would begin the closure of 114 sites from April, cutting its branch network by about a quarter.
Lloyds Banking Group is to close another 44 branches, blaming a lack of customers at the sites as people move to digital banking. The move comes in addition to previous announcements and means a total of 100 branches will close this year. Lloyds and Halifax branded branches in England and Wales are included in the latest closure programme.